I'm John Jenkinson, and the futures markets that we provide you here on Market Day Report are provided to us by Bar Chart. Let's pass those numbers along here, and then we'll dive into the analysis of today's trade. We've got the December corn contract down a half a penny at $3.68 a bushel. March is down 0.75 cents as well, and this was after a couple of pretty decent overnight sales and a somewhat decent export inspections number. November soybeans up 4 1/4 at $10.25. They're hanging right around that $10 mark. January is at $10.04. That is up 4 3/4. Chicago wheat, and let's go with the new crop July. It's up 1 3/4 at $5.58 3/4. New crop July Kansas City wheat is up 2 pennies at $4.98, and Minneapolis wheat for July right now is up 3/4 at $5.61. That doesn't tell the whole story, though. The rest of those contracts just happen to be lower. Cotton market, though, today is higher, 178 higher at 66.59. That is cents per pound, 66.59 cents per pound, but that is off of the earlier high. Here with us is Todd Horwitz. He's with Bubba Trading. Todd, it's good to see you today. Thank you very much for joining us, sir. What kind of volume are we seeing in not just the grains, but all in the markets today?
Good morning, John. The volume is what I would say would be pathetic. I don't see much going on here, which is why we're seeing such a dramatic rally in equities. But I think that the action in the grains is very, very positive. I expect soybeans and corn to be lower today anyway. So the fact that they're close to unchanged or slightly higher, I would expect by the end of the day, soybeans may close lower on the day. Now, again, that doesn't make it bad. That's actually more bullish for the longer term. You know, one of the things we have to remember is the markets do not perform well when they go parabolic in one direction, and they've been going straight up for the last couple of weeks. And I think you want to expect to see some selling. I mean, you know, we had the report, which obviously I don't focus on, but the price action going into it suggested that it would be bullish. We got bullish price action, and now I would expect to see a small pullback, which would really serve as another buying opportunity, because I look for this rally to continue a lot longer.
You mentioned that big rally that we're seeing over the financial market, how things are kind of shifting around there. At some point, do you see down the road, or do you get the feel that maybe some more of this fund money that is being invested in the outside markets, like the Dow, the money markets, things like that, will make a shift over to the ag commodities?
I do, John. I mean, that's always one of my theories. Now, again, we haven't had that benefit for quite a while. You know, with the Federal Reserve continuing to keep interest rates almost at zero, it's hard to get money out of there. But I think that's, you know, things are going to change, and you're going to see some selling, and you're going to see others looking for some alternatives, which the grains and the agricultural markets are a great alternative, which typically have some great benefits once the funds start to come in. I think that will be the helpful push to the next rally, the next leg higher.
I take it you're probably referring to inflation. Are there people starting to talk about inflation maybe rearing its head in 2021?
Well, John, it's hard to say because, of course, nobody will admit to the fact that we have higher prices. But, you know, you're spending more money for food and services, and certainly farmers are paying more to put goods in the ground, but yet the prices have not keeping up with the cost of inflation, which is a problem that we continue to recognize. Unfortunately, the Fed does not recognize that. So they look at numbers their way, which is if you're buying a washing machine versus if you're buying goods every single day, which if you're buying every single day, your paycheck is going more to your groceries and other things than it is to actual anything else. So that's the problem I see.
Okay, we'll come back and talk about the livestock trade straight ahead with Todd Horwitz of Bubba Trading. You stay with us. We'll be right back. Okay, now it's on to the livestock trade we go, and we'll see what kind of volume is here. We've got the October live cattle up 130 at 106.82 a hundredweight. December's up $1.40 at 111.30. To the feeder cattle now, it's the October up 165 at 142.22. November feeder cattle up 127 at 142.60. All of those contracts at least $1 higher, but again, like we've been talking about, off of their earlier highs. Now, the October lean hog contract is down $1.35 at 65.22. That is not on the low, but it is closer to the low than it is the high. December's down $1.90. Then the February's down 62. So Todd, what kind of volume are we having over here in this livestock trade? And we'll start with the cattle first. What's your thoughts?
Well, the volume is light there, John, but again, you're getting a natural hold here. You know, we're a little negative the cattle right now, but overall, they're holding up very well. So I would expect to see either they're going to have a hard break to the downside or they're going to actually hold here and move higher. It's really too hard to call from here with the overall action, but the actual fact that they're holding at these levels is very, very positive for cattle. So hopefully that'll mean good things, that we're going to have some higher prices. And the hogs themselves, you got to figure they're going to have a little bit of a sell-off. You cannot go up, $3 a day and not expect some sort of a pullback. And I think this is, again, like corn and soybeans, this is very healthy for hogs. A pullback is better than we continue to go straight up, because straight up markets usually end. And I think this bull market is just beginning in the hog markets.
Do you think the consumer still feels pretty solid here? What's the trade think?
I think they do, John. I mean, just obviously look at the stock market. People, when they get a chance, they go out and spend money when they can. I think we're chomping at the bit to get all 50 states open. We're chomping at the bit to get everybody running, because I think people have come to the realization of what the virus is. And if you're at danger and you shouldn't be out, then you shouldn't be. But if it's okay, you should be out and be enjoying yourself, because that's what life's all about.
Okay, Todd, well put. Thank you very much. We'll talk to you again soon. Janet, there is the latest from the market desk. Back to you, ma'am.